Hello and welcome to Forbes India. I'm your host Samreen Wani. After more than 100 days of hostility, Iran and the United States have finally agreed to an interim peace deal with a formal memorandum of understanding expected this Friday. What does the post-war world look like for India? And how long before trade corridors open and prices stabilize? To discuss all of this and a lot more, we have the Chief Economic Advisor to the Government of India, Dr. V Nageswaran, with us today. Dr. Nageswaran, welcome to Forbes India.
Thank you.
What's your initial assessment of this agreement between Iran and the United States, and what fundamentally changes from India?
I'll speak about the macro implications. Obviously, we are very pleased and relieved that the price of oil has already reacted so well from the Indian perspective to the prospects of the peace deal. In fact, the oil price has continued to decline throughout this week, even though the agreement was known by Sunday, and then Monday the market already reacted, but it's continued to decline, the oil price, because of expectations not only of the Strait of Hormuz opening, but also of Iranian supply coming into the market in a more open way, etc. And also, if the sanctions on Iran are removed, then it is possible to add one more supplier for other countries to choose from. And naturally, the oil prices are responding or reacting to that, which is good news for us. So in a way, if this whole thing turns out to be very durable, then it does bring us back to February 27th, at the time when we said the Indian economy looked to be in a very good spot, very good place. And I think we will be getting back there. Of course, in the meantime, we have had the monsoon-related questions crop up, but we will deal with that later in the course of the conversation. But right now, I would say this is definitely a very welcome news from the Indian perspective in terms of where the macro balance will be maintained. It's a very good news.
Right, but assuming this deal is signed on Friday, how long do you think will it take for supply lines to restore to pre-war levels at least, and prices to rise? We've already seen crude prices coming down, but in terms of like natural gas, fertilizers, when do you see those prices
I think fertilizer prices, by the way, have been dropping even before the agreement's framework was released was talked about on Sunday. So I think, in fact, that is because China has agreed to come back into the market and release urea for export purposes. Therefore, fertilizer prices have already reacted. Natural gas, I'm not an expert. Probably it's a question of the amount of natural gas that is demanded by Asia versus Europe and the winter prospects there, etc. So I really am not at a position to comment. I'm not an energy expert. But I think it's good to see the fertilizer price react even before the deal was announced, and it has come back well before the pre-conflict levels, because that would have been a significant drawback for India from a macro perspective. The fertilizer subsidies would have gone up had the prices remained high, but now we are not only at the pre-conflict level but even below that, and if it sustains, then I think it's even as good a news as it is the case with respect to the oil price decline.
Right. But what about a post-war reset, Dr. Nageswaran? I mean, how does a post-war world look like in terms of trade dynamics, economics, supply chains for the world in general and particularly for India?
No, I think some of these questions that you're talking about, the global trade, supply chain dynamics, etc., they all were there even before the war started. Those things had become more uncertain, more open to questions, and countries favoring people, other nations that ally with them, etc., and resorting to export licensing and supply chain disruptions. A lot of developments have happened, and those developments will still be with us. What has happened is an incremental additional layer of significant uncertainty that this war brought to the world, that has been taken away. So we have to go back to dealing with these issues which were there even before the war started. So those are still there, and they will continue to exert their own uncertainty on the world, except that this was another huge addition, and that huge addition appears to be gone for now.
Let's talk about the numerous measures that RBI has put in place, right, to increase foreign inflows back. There's the hedging support for FCNRB, a scheme for fresh 3 to 5 year deposits. Right. There's a concessional forex swap for quasi-sovereigns. There's an exemption for foreign investors on capital gains, etc. What's the government's estimate on the inflows expected from these measures?
I don't think we have a particular estimate. We do expect the response from the diaspora and other investors to be quite positive. What the number would be, whether it will be north of 60, north of $80 billion, etc., we don't know. But we don't have an estimate. Right. Central bank may have one. Yeah.
Right. Once these foreign investors do enter India, I mean tax-free. Is there a mechanism preventing them from pulling out of.
No.
the
We can't
first
put in
turn
place
of-
mechanisms to stop them from leaving. That would actually be counterproductive.
Right.
I mean, investors come in only if they know that they can exit whenever they are able to exit. So I don't think there is a conversation about exit limitations.
Right. Again, Brent crude prices have fallen since the announcement of this deal. There's been a positive movement there. There's been some breathing room for the government, for OMCs. There's some relief there. But right until now, OMCs reportedly, they were taking a hit of about 650 crores per day. This is despite the government support that came in. And they also had transferred some prices at some places to, there was some of that. For how long do you think this breathing room could actually protect the average Indian consumer from any
I think from
increase
what
in
I
cost?
gather, again, these estimates are, I can't speak with 100% accuracy or confidence, but what I gather is that the 7.5 rupees per litre that we pass through to end users, I think is the equivalent of about $83 to $85 per barrel. But today's prices are well below them, in fact. So so in some sense, if these low prices sustain, then I don't think there's any need for further pass through.
Right.
Yeah.
A question about the current account as well, Dr. Nageswaran. So India's current account figures for the Q4 FY26 that came in, they show some resilience, right? We had a surplus of $7 billion and remittance inflows of $41.3 billion.
Right.
Even the current account figures for April,
Yeah.
they were largely
Current
driven
account
higher.
is a surplus in April.
Yes, correct. They were driven high by an inward remittance flow, right? Given the initial fears that these things, remittances particularly, were going to decline, what factors do you think have kept the inflows robust?
We naturally welcome the higher remittances which we have received, but it could also be a case of front loading of the remittances. So we never know. But in general, I think remittances flow for the whole year, FY26-27, would depend on how soon the Gulf economies resume their economic activity and construction activity, etc. Then again, they will have more demand for our labor, etc. And so it is still a lot of too many moving parts here, but in general it is safe to assume that there would be a remittance impact on a full year basis and plan on that. If it doesn't turn out to materialize, it's well and good for us.
You were mentioning about the monsoon in the beginning of the conversation, and the finance minister a couple of days ago, she did mention that farmer incomes is going to be under stress because of deficient monsoon. We are already seeing monsoon delays across the country, deficiency across the country. How adequately do you think India is prepared to deal with El Nino this year?
No, I think on the basis of the fact that, first of all, compared to a global oil shock, a monsoon deficiency is something that India has encountered before. So there is a playbook which we will follow. But as of now, even though reservoir levels are not full, but again compared to last year's average or the normal average, they are still above these levels, which is a good sign. And I think the fertilizer availability has not been a problem even when the prices were higher at the initial stage of the aftermath of the conflict. And I think farmers sowing for the Kharif season has been better than last year. So I think there is a certain level of resilience and optimism here that we will be able to weather this. Of course, the actual developments of the monsoon will play out regardless of what the expectations are. I mean, depending on how severe the El Nino is and how weak or strong the compensating Indian Ocean dipole is. So we don't know. But I think as of now, we could say that I think we have the playbook and we have the preparation when we have some of the parameters which are in a satisfactory level, that I feel we can handle this. But more importantly, we should think about the subsequent year and years, depending on how the strong El Nino, whether it develops into a super strong El Nino towards the end of the year and what it means for the Rabi crop, etc. Those are the things we need to think about. I think from a Kharif crop perspective, I think we should be reasonably well covered.
Right. But another news coming in from the United States, right? The export directive on disabling Clause 5, Fable 5, sorry, for all non-American citizens. Do you think this has an immediate effect on India's AI capabilities, and does this accelerate sort of the urgency for a truly sovereign, foundational India AI model?
No, I think as we discussed earlier, these are all part of the export licensing, supply side restriction that have sort of been invoked by countries over the last 2-3 years or even longer. So I don't think that this is applicable to the entire world outside of the US residents. The order says it cannot be offered. Now, obviously, regardless of this particular directive, I don't think we should be looking at this as a sort of an important. It's an important reminder, no doubt, and it does continue to underscore the significance of a country like India, which is so large, which has built a lot of capabilities on the basis of digital infrastructure, etc. It's just a reminder that we need to keep investing in our own capabilities. It is just one more in the series of developments over the last couple of years, not necessarily with respect to export restrictions, because this one is global. It is just an important reminder, no doubt, but I wouldn't over stress on this particular development alone.
Right. Again, in the field of AI, you have said in the past that we need to encourage AI-insulated jobs.
That's
and
right.
Those are the kind of jobs that are going to be in demand in the future. But there's also a reality that there's a significant proportion of Indian youth right now, right, where the unemployment levels are really high. We had the unemployment figures come in for last month, just a day before yesterday. We see an uptick in unemployment level and a drop in labor force participation. My question to you is, what can India do to nudge this human capital back into the workforce? This human capital which is dealing with the fears of AI and job losses in the future, what do we do to nudge this capital back into the workforce?
Multiple initiatives are already underway. The Labour Ministry, the Ministry of Skill Development have been at it, and the entire budget of July 2024 was dedicated to this whole question of employment, whether it is in sort of redesigning and rejigging the apprenticeship schemes or the PM internship, and then the incentives given to manufacturing and first-time employment, etc., both employer and employee receiving incentive. These are all parts of elements of this approach to handling the fallout of AI on labor market, because the AI impact on India's employment in the IT related space is still relatively a smaller portion of the overall employment question that India needs to deal with, because we have to create 8 million jobs a year, or 8 million livelihoods, I would put it that way. And AI and IT sector employs only about 6 million people. And even if over a period there is some reduction in the workforce, etc., in relation to the number of jobs we need to create every year, this is not a significant portion of the argument. The picture is about creating jobs. And AI lends a certain level of urgency, but I would say the question for India is independent of the AI about employment generation, and AI's contribution to this question is just a marginal increment to this whole thing, except that in the IT sector it probably is more important. The other thing the government of India has been doing, and state governments also have been doing, is people do not connect this exercise of deregulation and ease of doing business with job creation. It is central to it, in fact. The more we are able to allow businesses to focus on business activity rather than compliance activity, then we are giving them both fiscal, financial and managerial bandwidth to be able to focus on growing the business, recruit people, etc. So that is also a very important part of the job creation policy framework. The third element, and I would stop here, is that the free trade agreements that we have signed, concluded with many regions of the world, are equally important, because they open up markets for exporters, particularly in labor-intensive services, labor-intensive manufacturing, whether it is with the UK, European Union, and now conversations are going on with Canada, and the agreement with Australia is going to be made into a comprehensive economic partnership agreement. So these are all other elements of creating jobs and creating AI-insulated labor-intensive manufacturing and services. So as you can see, we have been pursuing multiple efforts in multiple dimensions to be able to create, to sort of keep the job creation engine humming. And AI may have lent a certain level of urgency or an incremental significance to this exercise, but the government has been focused on it for quite some time, even before AI became a hot topic.
Right. Again, you have previously suggested that the era of open globalization likely ended in 2015, and now the next 20 years look more like the 1925 to 1945
That's right.
period, right? You've also suggested that we need to shed old models of thinking. I want to press you a little further there. What kind of new models do you think a country like India should take forward to deal with the fragmented world that we are going to step into?
No, it's about basically multi-alignment at the geopolitical level. It's about the importance of manufacturing. Last 20, 30 years, we could bank on services to give us the foreign exchange, create formal sector employment, etc. But I think we really have to now think very hard and very on a sustainable basis about manufacturing, because the market may not supply us those goods as they were doing very easily. Because so many trade-related restrictions and actions are being pursued by many countries. So one is the multi-alignment, importance of manufacturing, and importance of creating strategic buffers in commodities, but not just crude oil. So these are all the ways in which we have to distinguish the last 30 years from the next 20, 30 years.
Right, but another area where we that has been in the news are the drop in fertility levels, right, below the replacement rate. That's also a challenge that many commentators have been talking about and writing about. How serious is this challenge right now, since the SRS data tells us we have dipped below replacement levels, 1.9 to be exact. What long-term impacts do you envisage for India?
But the working age population will continue to rise for some more time. So in that sense, what is more important is the working age population, whereas this dip in fertility level is not exactly uniform throughout the country.
That's right.
Some regions are still having a birth rate that is higher than the required replacement rate. So the question is one of continuing to facilitate internal migration. That is important, because large country, which is a continental size, and even European Union, for example, has created labor mobility across countries. So similarly, we need to continue to remember that this is the case of where labor scarce regions, which will become more scarce in the years to come, should continue to remain open for migration, both socially and economically, and in terms of the regulatory framework, etc. And also those states which will continue to see the population grow faster, they have to also invest in skilling and other dimensions. But I think for us, we still have a window of time before we become a country that will face labor shortages. That is not the case yet. Yeah, so in that sense, we have time to prepare ourselves for the so-called demographic slowdown. We will still be in the upswing with respect to working age population.
But what about states in the south, for instance, Karnataka, Tamil Nadu, Kerala?
Yeah.
All of them have fertility levels
that's right.
lower than Southeast Asian economies, in some cases lower than Scandinavian economies. Is that a cause of concern?
Well, obviously, relatively labor scarce or states which have much lower population growth rates can pursue capital intensive growth, and some of them are also already technologically advanced, and they have skilled labor, and they have been attracting capital intensive and tech intensive industries, and that is the path they should choose. But the other parts of the country where the population growth rate is still at a healthy level, etc., they are the ones who need to pursue and invest in labor intensive services and manufacturing. So that is the way. If you imagine India to be not a federation as we are, but let's say 28 independent countries, naturally some countries will have slower population growth, and they will pursue a different growth model. Some others will pursue a different growth model, and that is fair. That is par for the course.
You had said back in April that you would need to look at least at a quarter of data to give any assessment of India's growth. We are nearing the end of the first quarter. The war is coming to an end, hopefully. Is there any assessment, any recalculation done on India's growth estimates?
No, I think I have said in recent past that RBI's estimate of 6.6% with a downside risk attached to it, an inflation of 5.1% forecast for FY27 with an upside risk attached to it. These are good numbers to work with. So we're not going to second guess the central bank at this stage.
Right. On that note, Dr. Nageswaran, thank you so much for your time.
You're most welcome. Thank you.